I want to thank you all for joining us for the impact investing webinar, and we apologize for the technical issues. Um, the universe broke down temporarily. I want to start very quickly with what the format of this particular session is about. Often we have webinars that are talking heads, and what we want to do is really illustrate how we operate in Oxford. It's really about you as the student who's learning how to get into impact, how to maximize social returns, environmental returns, and financial returns. And right now we have um, colleagues from almost 400 colleagues from 58 countries who signed up for the webinar. And we all come from very different places. This particular slide actually comes from a case study that we use in social finance course that looks at the portfolio, social finance portfolio of UBS, Optimist Foundation, and UBS, and their partners. So this is a development impact bond, and we go deep into these kinds of issues in our social finance course. Next slide. And we're going to quickly go through this series. Our goal is to prepare you to tackle the world's most complex issues and to help you build and strengthen your network. Next slide. Again, this is Said Business School. We want to bring you to imagine you're in the classroom right now. We don't usually have these technical issues in the classroom. But having said that, you're at Said Business School, so welcome. Next slide. We offer 3 programs that are interrelated. We started with an impact investing program 7 years ago, and our students, alums wanted a social finance course, which was blended capital, so that we want to distinguish between impact investing and social finance. For us, social finance is really about a systems approach. It's blended capital. It moves throughout from philanthropy or all the way to private sector investment and includes impact investing. We look at SDGs, we look at systems change. So we look at countrywide change, leveraging billions and trillions for change. With our impact investing course, that's very deal centric. Often our students come and want to create a $20 million fund in a particular community. So both of them are about tools and measurement, but they are also at different scales. Social finance is blended capital across the spectrum, public sector, private sector, philanthropic resources. Um, and impact investing is a subset in many ways of that. Impact measures allows you to go into a deep dive of what are the new tools that are being used to measure both numbers and nuance, qualitative differences, not just quantitative numbers. So this is a complementary suite of programs that we offer our students. Social finance, we do case-oriented daily illustrations and examples where students come together and actually work on a case for the day. And in addition, we use CEOs as guest faculty members who have lived and breathed the experience so they can be very candid and honest with our students. In impact investing, again, it's more deal-centric. Next slide, please. Here's the ecosystem in which we operate. You can see impact investing is a slice of this. Social finance goes throughout. Next slide. And again, we work at the most complex issues. Next slide. We focus on the SDGs. These really look at the most difficult issues facing our world and how we use capital, social, human, environmental capital to achieve change. Next slide. This is an illustration of our global network that students who come into our world can take advantage of. Next slide. And this is Gail Peterson. I'm the one who's talking right now. And I direct both the impact investing program and the social finance program. Jen Price, who's one of our fabulous faculty members, has also joined us. And we really wanted to, again, do an unwebinar webinar. We wanted to answer your questions. We asked for input and questions before the session so that we could actually address your needs and to give you an illustration of where the field is. So we're going to be spending the time we have together to really answer your questions. And we had an overwhelmingly positive response. So we're going to work through as many of those as we possibly can. And for those that are remaining, we will provide you with our written answers, and they'll be posted on our website. So Jen and I are going to have this conversation together. Next slide, please. When we think about the ecosystem of investment, this is how we look at it. Stage of development, typical sources of funding, typical investor type, and the role of investor, early, mid, late. And again, how one begins to have an impact at whatever stage you're at. And it can be there are disruptors and accelerators for change, but this is the ecosystem that we use when we move into a classroom. Next slide, please. So with that, Jen and I are going to work through the questions, and the topics that came up in clusters of questions were: how do you get started? All things equity, culture, context, and geography, government, philanthropy, and intermediaries, building partnerships both within your institution and beyond. How do you use dibs and Sibs? What are legal needs that you have when you move into the space? Impact measures, performance, and disruptors, specifically focused on technology. So with that, we're going to pull up your questions, and Jen and I are going to respond. Next slide, please. All right. Jen, are you on?
Gail, can you hear me?
I can hear you. Welcome. Welcome. I know it was not SBS technology issues, right? So I'm glad you're here.
My first moment was to apologize. It was somehow on my end, and I'm in. That's the good news. So it's great to be with you. Thank you.
And you're here, and we're having and we have a great time and great relationship, having fun with our students to learn and accelerate their learning. So Jen, we're gonna actually work through how do you get started.
Yeah.
And with some, we've got, do you specialize? Are there technical skills that we need to have when we move into the space?
Yeah.
And so let's get started with that. Do you
Great.
specialize? And if so, what are the skills you need to get started?
So kind of moving off of one of your earlier slides, Gail, when you just shared about, at least for SBS, the difference between impact investing and social finance. The question here is really about impact investing. And so when people ask me that, and let me just preface it that I sit in an organization, Calvert Impact Capital, that is really moving capital. We are a financial intermediary. So we are raising money from the capital markets, engaging with investors every day, institutional, retail, accredited, and then we're moving that money into financial intermediaries, funds, and social businesses around the globe in about 100 countries. We also run a syndications business. So just appreciating the perspective I come to a lot of these questions with, I wanted to put that bumper sticker out, but also I'm going to go broader in my answers and give you perspectives from other angles within the sector. And so kind of back to this question, when people ask me, impact investing, I tell them I work in finance, actually. Because it is at the core, impact investing, again, that being the deal-centric part, is really it's about using finance to enact systems change, investing to disrupt systems that aren't fully equitably serving people or planet. And so what I see is that the fundamental rules of finance do not change for impact investing. So we might be applying different principles to get to different means, but it's the same principles. So then two thoughts off of that. Within the world of finance, there's many roles, whether it's marketing and communications or legal. And those are all skill sets you find within impact investing too. So building the skills in the functional area you enjoy understanding finance is one thought to this answer. But then the broader thought that bleeds into social finance is that much of impact investing, the deals, is stepping across boundaries and really working with institutions that maybe have not interacted with finance before. And so language and understanding other people's perspectives and where they're coming from is very, very important. So you can imagine a healthcare center working with a provider of home cooked meals, maybe a Meals on Wheels, and how those two need to interact in ways that perhaps they never have before. And one of the skills, one of the opportunities for someone within impact investing or broader social finance is to bring those worlds together.
No, I think that's great. And we have a program called Lost in Translation, where we really enable our students to try to understand the perspectives of those different partners who are going to be working with them on an impact investing deal or a social finance blended capital deal. There's another question, just in terms of, do I focus? I would say, what's your passion and what's your capacity? Where do you want to play, and what is your capability of playing within that ecosystem? And I would choose, go with your passion, what you're most excited about, because it is about building partnerships, spending time, and many of these deals do take time to build. You want to be enjoy it, and you want to feel like you're accomplishing something. Jen, there's a important question too that Martin asked, and again, many of the colleagues who are joining us are students, so this is allowing them to continuing education class to go deeper in their knowledge about what happens when a lot of the impact investing methodology are coming from developed countries.
Yep.
How can they really be applied to emerging economies? And I want to just step back for a second and say, emerging economies for us, I had an interesting question from a colleague on LinkedIn related to this seminar, is where does Detroit fit, right? What's our definition of emerging economies? Detroit, if you think about SDGs in terms of sustainable cities, it's ranked among the lowest. So how do we define emerging economies, and how do we find what kind of methodologies in impact investing are appropriate for emerging economies, whether in the West or elsewhere?
Yep, and I agree with you, Gail. This is when language matters a lot. So even if the same methodology may be able to be translated, how we define success and scale in one maybe developed economy might be very different than success and scale in a developing economy. So I think there's nuance on both ends, both how we implement the methodology to be aware of cultural and local norms and realities, but also how we define what success is.
And I think that leads us to the next piece. Again, cultural context, cultural context, cultural context. Next slide, please. So for Laura, all things equity. And Jen, go for it.
Oh, this is a fun one. So, Gail, I'm going to send an article for everyone to be able to access, I hope, too. It was in Bloomberg Business Week at the end of December, and it's really calling into question the public equity space. Let me give you this statistic with a preface that most people access entry into the public equity space through mutual funds and ETFs. And listen to this. In the last 12 months through June, there has been 6,000 separate ESG indices created. So then the article goes on to really question, do we have a true north definition of ESG, and what constitutes ESG? So not to throw out the term greenwashing, but I think what we're seeing in the equity markets is an overabundance of opportunity to, quote, invest with ESG. And really, whether you use the term impact or ESG, environmental, social, and governance, as your prefix to the product you're bringing to market, the reality is there isn't a set of standards for people to really hold on to understand what they're really buying. And so the onus has come really to the individual to understand what they're buying and to be the activist in really moving their money into opportunities that align with the values that they're seeking with their wealth. So I think this starts to wrap into some of these other questions on this slide, Gail, how you measuring reporting impact. This is really at the eye of the beholder, at least in the ESG, the public equity market. If they're focusing on governance, we can get some great statistics around gender diversity at the board level. But if they're focusing on environment, then it might be a different set of statistics. What it is we're not seeing uniform across the E, environment, S, social, and G, governance. So there's different flavors of emphasis, and therefore it might not be aligned with what you're seeking as the purchaser. And so in this article too, it also talks about some of this concessionary and market rate returns. I will say in the private impact markets, what we offer at Calvert Impact Capital is risk-adjusted returns, and that's how I like to look at this question. It's not an either or, it's a continuum, it's a spectrum. And with that, this is where we move into the social finance piece of the conversation of how we use softer capital to really blend down the perceived and real risk so we can engage private capital into transactions in ways that are aligned with the needs they have. And then the last question I think is an interesting one too to go deeper on, but just to kind of put a little bit of a sentence around. What I would say is managers are mostly mapping their investments to the SDG right now at an investment level. So the investments in their portfolio, which SDGs are they touching? It's really an aligning though as they're reporting back to the investor. So aligning with the SDGs. And this gets a bit into the nuance that the SDGs were really built from a development lens, not a finance investment lens. And so at the indicator level, the overlap is minimal between the two practices of moving money and developing economies and community development. So that's a little bit on each of those, Gail, but I think a really interesting space is how we develop that public equity, public debt space with true authenticity.
And I think the emphasis on authenticity, the fact is the field right now is missing that consistent, acceptable definition. And so how ESG is interpreted, how SDG connections and moving the mark on SDG is measured is really ambiguous and nebulous. So I think we're in the process of doing a project right now that looks at that ambiguity to try to come up with some clarity. So these are fabulous questions. Next question, next slide. Thanks.
So this is a fabulous one too around gender lens. I think I'll just go into that and then
go for it.
You can couch the last two a little bit. But gender has been a really growing conversation, I think, as maybe a lot of people on this call know over the last decade in particular. That said, the business case is still getting formed. What we really had a lot of in the early years of the movement of the gender lens was the why it matters. Now we're getting into more of the quantitative business case rationale. And that's a lot because we now have the data. We've been investing personally here at Calvert Impact Capital with a gender lens for over a decade. And so we have now the portfolio performance of our investments with this lens for that period of time. And if you like, you can go to our website. We recently released a report in December called Just Good Investing, and it lays out the quantitative relationship between increased financial performance measured by return on assets, return on sales, and return on equity in relationship to board and management diversity. And we see outperformance in those organizations that are in the top quartile of our diversity. So it's a building conversation. And as you look at entry points, I would just say it goes back first to asking the investor, what kind of capital do they have? Is it equity? Is it debt? How much do they have? If you have a $20 million portfolio, you're considered a accredited investor. You can take more risk. You can do more with your capital potentially. If you have $100,000 to invest, you likely want to take less risk. So investing in the public markets will be likely your easiest access point. And we have also some information on our website, a framework that actually helps investors think about those questions and then put their money to work in aligned opportunities.
And we also have a brief that our colleagues on the call can access on the SBS website on gender lens investing. So, and the reason gender is so important in the context of SDGs, those most vulnerable, women and children, are impacted most significantly by SDGs. So bringing in a holistic approach to gender investing looks at impact measures on the most vulnerable, as well as the impact of the portfolio, up the value chain for women, from women on boards to the women on the shop floor. So really understanding how that moves throughout a supply chain to influence gender is really important.
And Gail, I think it's interesting because to me it starts to blend into the next question from Derek about, how do we get more local corporate organizations and learning institutions to support impact investing in emerging markets? I think Gender Lens is one of those moments and movements that does.
Mm-hmm.
One of the core tenets of Gender Lens investing is if you see a full market for your business, women, men, as consumers, you will create products, services, marketing, communication that reach those markets. If you have women in your workforce, they'll be able to communicate with that population, and therefore your business is stronger. And, that goes back to, okay, if we want women in our business, we need to think about community assets like potentially childcare, like education in schools, so they can come into the work and be part of the workforce. And I believe that corporate organizations, when they start to think about, okay, who do they want working for them, even if it's from a business case, because that's going to create the best outcomes in their business, they got to think about how can they enhance the opportunity for that woman to come into their business. They have to think about the community they're working in and what they may need to invest in or be advocates for investing in within their local community, more of the community assets that make a community really rich and improves quality of life for all.
Well, and I think the next, Derek had some great questions too, and then we're talking about how do you move from just cities into rural
Yeah.
places? And we think about agri-food sector, whether it's Africa, Latin America, or Asia. Jen, why don't you talk about your experiences in rural places around ag and food?
Yeah, and I think this is interesting because there's some questions that will come later on, and it's a little bit about how do we measure impact and how do we really understand what's happening on the ground and what's serving our end beneficiary best. I think there's a technical answer. I'll just step aside a little bit to answer that for this question, which is I think technology is going to make this an opportunity to really capitalize on. We have the same problem here in the US. Our rural communities, if you look at VC investment and capital, are way behind the coast. And there's movements to bring that capital in. But, technology is going to help bridge the operational and other challenges at times. But the other thing is really listening to who is in that rural community and what their needs are, and not just pushing down what perhaps someone from the outside is looking and thinking is needed. And we had a real life example of that, I think, Gail, that we both know well in Africa, really looking at a farming opportunity and advanced seed technology without really understanding all the implications of what that seed technology might really have within that community. And so I think when I look at the agri-food sector, there's a huge opportunity for innovation, for technology, for disruptive forces, but to do it within the context of understanding the community and all the implications of that advance is extremely important.
I think again, as we think about impact investing and social finance, we have a lot of colleagues from Latin America from Cambodia. There are several people on the call. Thailand. The whole idea of agri-food. There's also fisheries. How do we create sustainable fisheries and markets for sustainable fisheries using impact investing and social finance tools? And there, in our social finance class, we're going to be focusing on agri-food and fisheries and forests as opportunity areas for conservation and economic growth. Let's go to the next slide, please.
Mhm.
The role of government, philanthropy, and intermediaries. Again, this idea of blended finance and how we move into how do we create new opportunities for blending those relationships, and how do we use intermediaries? David, it's good to see your question, as well as Marcus. Jen, thoughts on that? Where do you see
Yeah,
the trends?
Well, it's a great question, set of questions, and I would just want to say, first of all, Marcus and David, in particular Marcus, this question about if you're not local, how to get your money into emerging economies if you're not there, and leveraging intermediaries, I think is spot on. So the strategy of looking for intermediaries that do have boots on the ground, as they say in these countries, or are housed or headquartered both perhaps in a developing and an emerging economy, they're ideal to move money into these economies. And I think that's one of the trends I'm seeing, and maybe this is my over optimism in the donor community, is I see more investment within the local organizations, and providing technical assistance, just general support to build up the skill sets that can lead to stronger businesses growing within the local context. And we had a fabulous fellow with us recently. She's Egyptian, and one of the things she noted that I found just really fascinating is kind of small and growing businesses grow up when they think about exports, moving goods outside of their country. They then need to really think about some more financial infrastructure and reporting, and that's kind of a flexion point. And I think we're seeing, to really grow and sustain some of these businesses, exports are important. And if they want to be able to do that, they need some technical capacity. And I see donors and funders understanding that really our goal is to create sustainability, and you got to support the inner workings of an organization to really get there.
Well, and I think that's really an important piece. Very often there's been a donors, whether it's public sector, private sector, or philanthropy, and we're talking about 2.5 trillion in emerging economies deficit in shortfall in terms of meeting SDGs. There's an immediate sense of, I'm going to drive this from the donor, as opposed to stepping back and saying, how do we work at a community level to actually build that capacity? So we spend a lot of time in both impact investing, but especially social finance, in helping build those relationships. How do you work locally? How do you make sure that intermediaries are skillful and have what they need to work at a local level? And I think that we can certainly, there are resources with each of these questions that we can provide some additional literature for you to read. But the idea of alignment with intermediaries, do they reflect the donors from afar? And just as important, more important, the colleagues with whom you're working on the ground. And how do you make sure, especially when you're working in such great distances, right? That in fact there is that alignment and there's that ethical relationship that results in positive impact. Next slide, please. Partnerships. And I think this is an interesting question in terms of, thank you, Martin, the idea of how do you get government and your own organizations to kickstart the, impact investing or social finance when it's very new to them and they don't understand what it necessarily means. They've heard cool things about it, but what do you actually do to bring it into the culture of your organization? So Jen, do you want to talk about this?
Yeah, sure. And this is a great question because government plays a huge role, both in providing perhaps some patient capital, but also in just providing the right legal policy and regulatory infrastructure to really support small and growing businesses or to support affordable housing sustainably. So I think there's two parts to this question as well. Really thinking about government kickstarting and government kind of catalyzing some of the sector within a country, but then also how does it create a good enabling environment through the policies, regulatory framework to sustain it. And that is a lot of the advocacy that is ongoing. That is a great conversation that, Gail, I know comes up in class a lot when we really think about social finance, not just the transaction to get the money in, but then how do we sustain it and stabilize some of these efforts. But I think right now, one great case study to look to is Canada as it relates to a government. They are making some pretty big moves in allocating resources to kickstart impact investing within their country. And I think they're being very thoughtful about how do we either engage the private sector to take it on once we kind of demonstrate, and being realistic about what their role is in that effort. And I think that's one of the questions, within the context of government, is thinking not just the short term, how do you kickstart them, the medium, long term, what is the role of government, and therefore who else do we need around the table when we kickstart? Do we need some of the investment banks? Do we need some of the philanthropic players? Bringing everyone in at the beginning to really have a shared vision can be very powerful in ensuring you have medium and long-term outcomes that are aligned with what is best for society.
Yeah. Now let's go to the next slide because I think that the concept of Sibs and dibs. The first photo that we showed was
Yep.
again from UBS Optimus Foundation, Educate Girls. In that case, the proof of concept, different donors, philanthropic resources, blending with public sector resources in some of the work that UBS Optimus Foundation and their partners have done, is really about creating, show success, right? Pilot, show
Yep.
success, show what it takes, and then passing it off to government as a partner, a handoff. So building a proof of concept so that that work can in fact be adopted. And so the concept of development impact bonds and social impact bonds is something we go deep into for both of our courses. Jen, thoughts on Sibs and dibs?
Yeah, yes. And, if I could just go to the last question too, because, I find this interesting as a case study, and I hope I can talk more about it even when I'm there this year in the classroom, but the environmental impact bond in DC. Environmental impact bond, the outcomes are tied to the environmental outcomes of this transaction. However, we were one of the investors in the deal, and as it was pulled together, we were very vocal about ensuring that there was quality jobs too. It wasn't just about the environmental impact for us. Yep, that's how we were getting measured in getting our increased financial return. But for us, it was also important that the jobs were good and that they were going to be, a part of this deal. And what we have found out, which I find really interesting, is the jobs piece has become really a big thing for DC Water in trainings and in sharing the ability to create good jobs. And so they have actually gone and created now a program that's crossing multiple municipalities around quality and green jobs. And so this piece of the transaction, I never thought when we papered it, and by the way, all the green infrastructure is getting built, everything's on time and doing well. I never knew that the quality jobs was going to be the added impact here that would transcend beyond just DC, but is being taken up how to create green quality jobs by other municipalities within our country and the United States. But that is happening. And so, these impact bonds, we're tying to a very tight outcome, but the integrity, the partners, the structure of the deal in its totality is holistic. And, that's important too.
No, and
So
I agree. I think the piece from the piece for me with the Sibs and dibs again, we only have a few more minutes, and I want to make sure that we touch on a couple of other issues. There are cases that we have on Sibs and dibs that we will post on the website, and these are the things we go into detail about in class. Next slide. We're going to go through these pretty quickly.
And Gail, I'll just say here quickly, I
Yeah.
think the B Corp movement is huge in this. That's a legal tool. Just thinking about enabling companies to have not just emphasis on financial, but also social return as they're incorporated. Also, a lot of the legal documents now envision how companies sell or exit and retain the social values. So I think we've made a lot of progress here. And this is kind of like the core of impact investing and finance to me. Law is law, but we've made a lot of progress here. And I think the exciting thing is we need more smart legal minds around this work as this sector grows.
Right, and I was just in New York at NYU. The Center for Social Entrepreneurship has actually put together a docu report that summarizes legal tools needed in impact investing. So we'll, again, have that information available so that you can see what kind of, that's a really important body of knowledge and also a field that's emerging. And so we'll have that information for you. Next slide, please.
And Gail, here it's a fascinating one because I think the disruptors is huge. It
Yes.
stretches across all sectors, and we can go into many conversations. One I'll just highlight that I think illuminates the power of technology is, M-Pesa in Kenya brought on the advance of mobile payments. That really opened the door for renewable energy, the sector that's really focused on off-grid, bringing people into reliable power through renewable energy, solar panels, to flourish. Because a lot of those business models are based on pay as you go. So being able to lease, to own, pay through your mobile phone, and then acquire over time that technology. That was not an option for people before that technology advancement around mobile. And there's many, many examples of that, of how really mobile technology, I think, and this ties back to some of the earlier questions, is penetrating into rural areas, people that are maybe farther away from reliable power and other infrastructure.
Well, and there are a couple of the illustrations that we have with colleagues in China that are using technology for healthcare. Happy to go into greater detail about that. And we also have a case where a working capital fund for Humanity United and their partners, how you encourage technology and support technology, new technology entrepreneurs to track slavery in the supply chain. So there's some really interesting approaches, and that's to say privacy needs to be protected. So there's some very cool illustrations, and there's also a how do we do no harm in this field. Next slide, please. And this is a biggie.
Whoa.
Yeah, impact measures and performance, and that's what everybody wants to know. How do you make sure that you know if you made an impact? And Nick, I agree with this. Hard to measure impacts like confidence and empowerment of disadvantaged or marginalized people. Jen, your thoughts, and I'll certainly share some
Yes.
thinking about
So
it.
I do think this is so interesting. I would just say, one caveat here. I think Matt's question, the OECD has, said that, we need these common standards to really move capital in. That's not the only thing we need. I mean, one of the reasons capital isn't moving in is they're having a hard time accessing some of these investments, either because there's not products or it doesn't reach them and where their money is held. So that kind of correlation, I would challenge some, and that's just a headline that opens up a door to a very larger conversation. That's a fun one. But there is a need for impact measurements. And I do think, this is a large conversation because it's where we as an industry are trying to figure it out. And I think, from an investor's lens, the RCTs is interesting because quite frankly, we don't use them. That's not, it's expensive. And it starts to diminish some of the qualitative aspects of our work too. And so there's a lot in here, and a lot I would just articulate that we're still exploring. And I think this confidence and empowerment in the voice of the end user is the piece that I am afraid is getting left behind. And so is the piece that I think deserves a lot of dialogue.
Well, and that's the piece that, again, in our programs, we emphasize.
Yeah.
It really is the qualitative and quantitative data, and at the ground level, what kind of impact are you having? And again, those are difficult questions. There's a lot going on in the field. I was talking to a colleague, Jeremy Nichols, this morning before our webinar, and he basically said, make sure that you've got the money and your targets before you get launched in impact investing. Make sure you're not just measuring your own goals, but actually looking at the data and learning from it. And often that is not the case. We're looking for what's going to substantiate and agree with our initial theory of change and findings. And in fact, you've got to challenge yourself as a leader and a learner to explore different ways of measurement. And I think that's that's my background, and that's what we bring to the table in our impact investing and social finance. It's not always just about the numbers. It really is about the nuance and working at a community level. We will provide some background information based on your questions. What
Yep.
we've tried to do again today, and I know Annabelle, you want to give us some additional information about these 3 programs, but it's putting your needs first always as we're teaching and training. And we have tools online and in the classroom that allow you to learn and develop your own work plan on each of these issues. Annabelle, do you want to chat with us about and close us out? I want to thank you. Thanks, Jen, for joining us. We apologize for being late. And Annabelle will give us some more information about the programs.
Yeah, thank you, Gail. Yeah, thank you again to everyone for taking time out of your day to attend. Again, once again, apologies for the technical difficulties at the beginning. Just to really let you all know the dates of the programs that we're running across this year. The next program we're running is Impact Investing, which is at the end of March. However, that is on now our waiting list. So if you are interested in attending, we are recommending potentially to apply for 2020 as the places are very popular. Following that, we've got impact measurement in July and social finance in November. We're lucky enough to have people from all over the world attend the programs, from companies such as Barclays, Wellington, European Investment Bank, KPMG, but also from smaller organisations as well. So it's a great opportunity to meet people from different sectors and speak to them. Also having fabulous speakers, so Jen being one of them. We also have Anthony Ross from Vox Capital coming this March, Daniel Izzo from the Summit Capital Group, Nigel Ball from the Blavatnik School of Government, to name a few. If anyone does have any questions about any of the programs in particular, please feel free to get in touch. My contact details and my colleague Rola's contact details are on the screen. We're more than happy to have a phone call or speak to people online over any questions they've got about any of the programs. I think that leaves us there. Gail, if there's anything that you'd like to add to finish up?
No, I want to thank our colleagues from our alums who joined us, and colleagues who are new to the field. So we look forward to continuing this conversation and to seeing you at one of our classes. Thank you very much.
Thank you.